I have a plan. But first, let me break down exactly why I believe this is a shakeout, because whilst they're playing short-term manipulative games, something massive is happening in the background, something that proves crypto isn't just surviving, it's taking over. I'm talking about stablecoins. I've said this in my last few videos because it's mind-blowing to me. In 2024 alone, stablecoins processed $27.6 trillion in volume. Let me put that into perspective for you. Actually, no, I've said in my last few videos that it's more than Visa and MasterCard combined. You know this. But let's think about what this actually means, guys. Everyone says crypto has changed forever with BlackRock coming, but what does that actually mean? We now live in a reality where stables do more volume than the biggest payment processors in the world. And that was with fees. Now plasma is out and stablecoin transfers are literally free. You can send payments across the planet for free in seconds. This makes much of modern banking obsolete. Then add to the fact that BlackRock is investing hundreds of millions into crypto, Bitcoin treasury companies are exploding in value, the literal fabric of TradFi reality is being torn and remolded to include crypto. So is it actually over? Well, in the end, it's impossible to say. This could be a bubble. And this is not financial advice. I'm not a financial advisor, and I'm not saying crypto will go up for sure. But I find it hard to believe that as far as this industry has come, it's about to go into hibernation for another 3 years like it did in the past. The actual real-world adoption of this technology is exploding. This isn't speculation. This is infrastructure. In my opinion, crypto has become undeniable. So what do? They shake retail out of the future of money whilst they accumulate it for pennies on the dollar. I'm not letting them, but is there proof? If you want to know if a crash is real or engineered, there's one chart you need to look at. Not for the price, not the fear and greed index, Bitcoin dominance. Here's how it works. During a real market crash, a true panic, what does everyone do? They flee to safety. In crypto, the safest asset is Bitcoin. So capital flies out of risky altcoins into Bitcoin, and Bitcoin dominance spikes hard. Now look at what happened during this dump. Bitcoin dominance barely moved. It's holding steady right around 57 to 58%. What does that tell you? This was not a market-wide panic. This was a leverage flush. This was a targeted attack on over-leveraged long positions. Smart money isn't running to Bitcoin for safety. They're using their stable coins to buy everything cheaper across the board. They're not fleeing the market. They're buying the market. You're panic selling them. Right now, 97% of the market is in pure reaction mode. They're emotional. They're scared. They're making decisions based on fear injected into their veins by whales. They're falling for the trap. But the 3%, they planned for this. They knew it was coming. In my previous videos, I warned you about September volatility. I told you to be wary of the Fed rate cut pumps because they often lead to traps. This dump isn't just about liquidating positions. It's about making you emotionally abandon your plan. It's about breaking your conviction. So ask yourself right now, are you reacting to their psychological warfare, or are you sticking to your blueprint? Because the timing of this was surgical. It was brilliant in a diabolical kind of way. First, they promised that Fed rate cuts would pump the market and we would head to 150k. Rate cuts happen and nothing. Crickets. Then a few days later, boom, a massive dump. They wanted retail traders high on hopium to pile in. Leverage across the system built up to dangerous levels. Everyone was betting on up only. Then once retail was fully exposed, fully leveraged long, they pulled the rug. They triggered a cascade of liquidations, forcing your forced selling to push the price down even further. Why now? Well, because they need cheaper entry points. With stablecoin volume at record highs, institutions and whales are sitting on mountains of cash ready to deploy, but they can't just buy billions of dollars of Bitcoin on the open market without sending the price to the moon, unless they engineer the selling first. Every liquidation that got triggered was their limit buy order being filled. They didn't buy the dip, they created it. Do you not see the truth? They tell you September will be massively bearish. Instead, it's slightly bullish. They tell you rate cuts will be massively bullish. Instead, the market crashes a few days later. Believe nothing. So what's my move? It's the hardest thing to do in a market like this, but it's the only right answer. I do absolutely nothing. No panic selling. That's feeding the strategy. No revenge trading. That's letting my emotions drive. I just hold.